Hello friends, today is my 21st presentation for the team of Corporate Finance and Accounts, and the subject is part 2 of the cost reduction opportunities in finance and accounts function, and 79 opportunities have been identified. This is overall my 52nd presentation considering all the YouTube presentations I have made so far. Uh, in this presentation, I simply planning to include the list of 14 additional areas under the direct control of the finance and accounts function where the cost saving is possible, and the total identified cost saving opportunities are 79. The approach followed and the structure of the each PPT is same as in the part 1 in my 20th presentation posted on 16th March, and hence not being duplicated. And to keep the focus on the cost reduction, only the cost reduction opportunities activities have been identified and not the entire process of performing the activity. And this book is given in my second book called Profitability and Ethics: Essential Ingredients for Business Success, and is available on the Amazon. Now this table indicates total 79 opportunities which are there in each of the areas like product and spare pricing, engaging consultants, cash inflows, cash outflows, GSTs, income tax, imports duty, statutory payouts, employee cost related, depreciation related, bank guarantees and bonds related, write-offs related, expense control related, and others recoveries related. Starting with the cost opportunities on the product and spares pricing. Contribution has been defined as the net sales less net manufacturing variable cost, net less net marketing variable cost. So CFO, first opportunity, the CFO reviewing and ensuring their contribution is positive always and is not low or not below the industry standards. And otherwise, CFO needs to influence the sales team for reviewing the pricing. Number two opportunity is computing net manufacturing variable cost accurately and comprehensively. Now, this cost include the landed cost of the direct bill of materials consumed, cost of direct consumables, oils, lubricants, cost of direct labor, cost of direct power, cost of direct tools, cost of direct inspection and testing, cost of maintaining the quality standard certification, marking on the packing boxes or like Indian standards number, cost of rejection of the bill of material, and cost of job working paid to outsource manufacturers, etc. And the total sum of these is called direct manufacturing variable cost. Uh, Finance team has to compute these and share these with the sales team accurately and timely. Number third is the computing the net marketing variable costs accurately and comprehensively. These include the direct cost of the logo brand on the packing, the direct cost of the owner's manual and service manuals in hard or soft copy, the cost of pre-dispatch inspection, the cost of warehousing before dispatch, direct cost of outward freight and forwarding, the direct cost of outward marine insurance, the discount on the prices because that is also a cost, the incentive payable to the customer or the channel partner for the product model, the commission payable to the channel partner, the cost of free service rendered, and the warranty cost. All these add up to make up the marketing variable costs. And in case these costs are not computed accurately and comprehensively, naturally the contribution will not be all right. Engaging consultants. F&A team also engages different type of consultants. Uh, the negotiation points, the points are costing points are negotiating the following aggressively. The lump sum fee which is payable must be paid stage wise, but based on a well defined scope of work and after obtaining 3 to 5 bits. Payment terms linked to the deliverables rather than monthly or date linked. Free days to be devoted by the consultant at the client's work site, they need to be captured very clearly. Fee rate per day for different levels beyond the lump sum fees in case of the scope of the work increases or the time there is a time overrun. Clearly defined reimbursable rates for travel, including class, types of hotels, conveyance charges, and any out-of-pocket expenses. I have seen in experience that these contribute to greatly to the overall consultants' fees. Particularly, this is important in the context of the engaging the overseas consultants. Cost saving opportunities, cash flows. There are eight opportunities identified. One is the cash flow comprises of the four components here: cash inflow from operations, cash flow inflow from investing activities, from financing activities, and from overseas. And the opportunities identified in each case are 4, 1, 2, and 1 respectively. Cash flow from the operations 4. Here the opportunities for cost savings are uh, offer early payment incentive to customers, negotiate a payment inflow mode such as below to enable faster collection and lower payment of processing fees vis-a-vis the conventional check method like NEFT or RTGS or UPI transfer or auto debit for reducing the inflows or recurring time and any other aspects. Number three opportunity is set up automated payment reminders to the customers by email, dunning, etc. Like in the case of SAP or advanced SMS to reduce the expensive manual follow-up for the follow-up cost and the delays. Minimum cash collection, cash handling to minimize the security risk and the theft. These are the four priorities which can enable uh, savings in the cash inflows through operations. Cash flow investment activities, these include from the sale of fixed assets, sale of company securities, divestitures, repayments by the borrowers, etc. And opportunity for cost savings is that telling the investors to directly deposit of the telling the borrower to directly deposit the amount into company's bank account, eliminating check, instrument, processing fee, and timing. This is the cost saving for us. Cash inflows from the financing activities. These include like inflows from the dividends, return on investments in equities, receiving back value against the equity, stocks, bonds, etc. etc. Opportunities are saving opportunities are negotiating a payment inflow mode such as NEFT, RTGS, or UPI transfer or auto debit for recurring the inflows. Vis-a-vis check method. And direct number two is direct deposit of the due amount into the company account. And next is cash inflows from the overseas, such as from the customers or JV partner, etc. His contribution. Opportunity for cost savings are inflows from regular customers, explore maintaining a currency account in relevant markets to avoid foreign currency transaction fees when receiving the payment in FC. And number two is within that, for equity inflow from JV, establish a payment method with a hedging strategy for exchange rate fluctuation, saving on that. Cash outflows. 15 opportunities have been identified for the cash outflow. Uh, Cash outflow from operations 7, from investing activities 4, from financing activities 1, and outflow to the overseas 3. Cash inflow outflows from the operations. Now, opportunity for cost savings are for vendors, contractors, service providers install ERP system solutions for auto generating the three-way matching solution, which computes due amount, due date, thus reducing the expensive manpower cost. Establishing number two, establishing auto payment voucher and e-credit to the vendors to eliminate the marking and forwarding method, and this is available in many of these ERP solutions. And third is negotiate more extended credit periods to enable ease of working capital and thus reducing the need for borrowing. Number four is in case of surplus funds, negotiate early payment discounts and associated discounts. And number five is for advance payments, always negotiating a bank to obtain a bank guarantee with BG costs borne by the vendor contractor and so as to protect our risk. And number six is negotiating alternate payment methods like credit cards or online transfer to ensure timely payouts and enhance good vendor relationships. And number seven is in case of large number of employees like workmen in the factory, explore installing ATM in-house to avoid costly cash payouts and employees taking part of the day off to draw the cash. This is a phenomena which is experienced based. B. Cash outflow from the investing activities. Include cash outflow to vendors towards purchase of assets, purchase of securities or other companies' investments, and made and M&A acquisition, etc. Opportunities for cost savings are for similar to the one auto generating facility like ERP, similar to the earlier the auto payment vouchers and e-credit to the vendor. And three is extending more negotiating more extended credit period. And number four, for M&A particular, the payout is large deferred payouts linked to the stages of the work completion and accomplishment of the milestone rather than time based. Cash outflow from financing activity. These include cash outflows for dividend payouts, shareholders, redemption of shares by the customers, buy of treasury stocks, buy of bonds, debts, etc. Opportunity for cost savings are make payments online on the last day of the due date to maintain liquidity and save interest. Uh, this will enable certainly the interest cost over that period and improvement on the working capital. Cash outflow to the overseas vendors, negotiate payment methods like document through bank or online by Swift or LC, etc. And second is that explore using negotiate bank charges outside pay account and inside India to payer account. That means within India the accounts the bank charges to be borne by us, outside India bank charges will be borne by the beneficiary. In case of difficult liquidity situation, even in the case of LC, instead of having a site LC, having an extended LC period like 45, 60, 90 days by what is called usage LC, and where the interest rates are much lower compared to India, and relatively a lower labor rate plus 1 or 2 or 3% markup, and where the labor now is now replaced by SOFR, security overnight financing rate in the case of UST. GST, cost saving opportunities. Optimize input tax credit utilization by reconciling each vendor's invoices for materials and services received. Now, if this is not done, there is a opportunity of not utilizing the input tax credit. Reduce the impact of the reverse charge mechanism by exploring ways to bring the supplier services providers under the GST registration net to avoid paying GST under RCM, the reverse charge mechanism, where the buyer pays the tax on behalf of the adjusted suppliers. 3. Availing composition scheme benefits. Of course, this is applicable for the very small scale business. Explore GST incentive by utilizing any government scheme as and when available. Income tax related saving 5 opportunities. While making payment to the local or overseas consultant service providers, deduct TDS at the correct rate and deposit tax timely to avoid any penalties. Identify and claim all eligible income tax reductions such as below, like depreciation on the business assets, interest on business loans, research and development, and donation within the limits. Number 3, maintaining proper documentation to allow all expenses to be eligible. Number 4, timely payment of advance tax to avoid penalties. Number 5, based on the input from the tax advisor, choose the appropriate depreciation method like double DDMM, double declining balance method, offering higher depreciation in the initial years for specific assets. Imports duty. Ensure that correct HSN number of the material to be imported on the bill of material is there to enable correct custom duty rate and classification. And number 2, ensuring accurate valuation of the imported material on bill of entry to avoid penalty or and percentage loading that is increase in the that leads to increase in the import duty. Avail concessional rate of import duty wherever eligible, like project imports or R&D, etc. Avail benefit offered by the FTA free trade agreements if applicable to reduce the duty. Utilize the advanced authorization scheme to import raw material duty free in case of finished products meant for exports. Choose the appropriate port with less congestion and lower port charges to reduce demurrage. Of course, in this case, the active cooperation from the purchase team is also needed, as they normally interact with the customs and port authorities. Statutory payouts. There are different type of payouts, as you know, such as provident fund payout, ESIC payout, license fees, registration charges, GST payout, income tax, TDS, property tax, and so on and so forth. The cost management opportunities are: number 1, paying statutory dues on time to avoid late penalties, late payment fees, charges, and number 2, filing the returns or on or before the due date to avoid any penalties. Employee cost related. Three, three opportunities are identified. Number 1, influencing the HR team to carry out the benchmarking for pay package and annual linkages to bring sanity in the cost to the company, insisting on the implementing a robust annual performance-based system based on the competence and quantifiable KPIs and measures. Ensure that payouts such as below are designed, configured to comply with the statutory and taxation requirements, such as employee benefit packages, such as travel, health, bonuses, ESOP, etc., etc. Depreciation related. choose the three opportunities. Number one, choose the appropriate depreciation rate for each category of asset to determine taxable income correctly. Number two, ensuring correct assets classification into different types of assets. Number three, ensure proper categorization of the nature of the expenses like pre-capital, capital, maintenance of the fixed assets or non-capital, etc., and accordingly account for proper accounting of the cost as per the accounting standard. Cost savings opportunities receiving and issuing bank guarantees and bonds. Now, bank guarantees received from vendors or channel partners, that is number one. In this case, opportunities are negotiating that vendor and channel partners or customers bear the cost of establishing the bank guarantee. Number two, monitoring the timely extension or lodging of the bank guarantee to avoid its lapsing and financial risk to the company. Number three, safekeeping of the bank guarantee to avoid loss. In the case of bank guarantees which are given by the company, for example to the statutory bodies like to the customs or the bonds, etc., which are given, saving opportunities are: number one, negotiate cost sharing with the vendor for establishing bank guarantee, and monitor time betterly monitoring timely extension to prevent its encashment by the client, and timely vacating of the bonds submitted to the statutory authorities like customs or imports and export or SEZ commissioner, etc., etc. Otherwise, there is a blockage of the funds. Cost saving opportunities write off related. There are 14 opportunities identified. Write off can be of uh, uh, different types like inventory write off, assets write off, and bad debts, and so on and so forth. Inventory write off. Cost saving opportunities. Number one, ensure write off documents are properly authorized and fully supported. Number two, verify inventory physically before write off and quarantine it for disposal. Number three, ensuring implementation of the inventory control system such as below to minimize inventory loss and write offs, which is ABC classification, coding of the inventory, perpetual verification, MRP2 ERP software based ordering system of the materials to avoid excess stocking, first in first out FIFO, secure storage to reduce damage or theft. Cost opportunities write off related assets write off. Six opportunities. Number one, implementing periodic verification and assets numbering system. Number two, proper installation and safekeeping of the assets to prevent damage. Number three, timely preventive maintenance to avoid breakdowns. Number four, for high value assets, carry out periodic residual value assessment. Uh, Number five, ensure write off document is comprehensive to incorporate residual life, quality output, productivity rate by the technical team so that unnecessarily write off is not done. And number six, negotiate disposal of the written off asset based on 3 to 5 quotations. C. Bad debts write off. Five opportunities. Number one, establish customer wise credit limits. Number two, ensure that the system does not allow further billing if the credit limit has been exceeded. Number three, automate dunning reminders to the customers for recovery of the receivables. Four, robust monitoring of the aging of receivables customer wise. Number five, putting in special recovery efforts for high amounts of receivable. Cost saving opportunities, expense control. Now this is a conventional saving opportunity available where there are each and every head in the P&L account needs to be monitored, uh, uh, budget versus actual. So here let me just share: institutionalizing a robust budgeting system for P&L and for balance sheet and cash flow. Number two, developing through IT ERP robust dashboard MI system and putting in place and monthly monitoring of the budget versus actual status on month to date basis and year to date basis. Number three, ensuring cost reduction and cost saving as a critical key array in each of the business function with the help of HR and HODs. Last point being other recoveries. Uh, in addition to the customer receivable, there can be different types of recoveries such as government incentives, export benefits, insurance claims lodged, and debit notes on the vendors, channel partners, employees, loan, etc. So on. Number two, outstanding materials which may be there like end product for the sales exhibition materials or bill of materials sent out for job work or returnable basis for repair, etc., and so on and so forth. Cost saving opportunities are: number two, periodic reconciliation and monitoring of all such outstanding dues of the materials or the assets lying outside, and timely follow up for their recoveries. Future references. You can refer to my second book titled Profitability and Ethics: Essential Ingredients for Business Success. The book has been listed in the Amazon as per the links given here. You can also refer to some of the article of your interest on my website. Address is given here and also on the Facebook and LinkedIn. Thank you very much.